Hi, everybody. Welcome back. My name is Craig Kern. I'm the founder and lead educator here at True Alpha Trading. Today is August 2nd, 2026, and I'm just back here to give you an update on my position. We'll look at a little bit of a recap of just the price action that occurred over this past week, and then I'll click over and show you just how my position ended for the month of July. And then I did also reestablish a new position for the month of August. So we'll take a look at all of those things with this update. The first thing just that I want to zoom in here and show you is, again, just the price action that occurred this past week. This is something that I like to look at on a week-to-week basis because, again, what I'm positioning myself and managing risk around in this case is price extremes. So if you're new to this, something that you just need to know right off the bat is that I don't use fundamentals, and the course and the system here that we teach you how to implement and use isn't based on fundamentals. It's not based on technicals. It's not based on news headlines or macro information. It's solely based on price extremes, which is just a more statistical approach. We have a whole suite of tools that includes our spin calculator, which you'll see here in just a little bit, as well as historical price extremes on the major indexes. And so we have a lot of consolidated information there just for you so that you can use that information to position yourself and manage risk around price extremes on the major indexes. So the first thing that I have pulled up here is just the weekly move. So if we look at where the market closed the Friday before this past Friday, which was July 24th, as you can see here, we had Monday, Tuesday, Wednesday was a big down move. I actually made a couple of adjustments into this down move, as you'll see here in a little bit. And then Thursday, we rallied hard, and Friday, we saw a continuation of that rally, only to close higher for the week, which also marks the end of the month. So July 31st in this case. But on a week-to-date basis, we closed right at 75.0350 on the S&P futures here. That move from the Friday before last to this past Friday was a weekly move of 0.80% higher on a week-to-date basis. The blue arrow in line here that marks this candle is actually marking the close from June 30th. So this is to highlight just where we are on a month-to-date basis. So over the course of the month of June, you'll see kind of this, all of these candles consolidating that move. Well, from where we closed at the end of June to where we closed this past Friday, which also marks the close for the month of June, for the month of July in this case, was a month to date move of 0.51% lower on the S&P 500 futures here. Now that move is going to correlate with the S&P 500 index as well. That move lower on a month to date basis, or I should say a week to date basis and a month to date basis, is going to correspond to what you'll see on the major indexes as well. We incorporate futures in the system that we use here, and we pair our system with the futures in this case. And so that's why we're tracking the futures contract here, is because it's most closely paired with the futures contract. But again, the futures in this case and your position is going to track along with the S&P 500 index overall. So that's just something to note here as well. I'm going to double click here just to back out so you can see here where we are on a year-to-date basis. So the red line on the screen here, this candle that is real tiny right here, marks where the S&P 500 futures closed at the end of last year. So from where we closed at the end of last year to where we are so far this year, that's a move higher on the S&P here of 8.84% higher on a year-to-date basis. So again, what I've positioned myself and what I've done over this entire year so far is I've positioned myself and I've used price extremes to manage my risk on a week-to-week basis, which just extrapolates out to a month-to-date basis and, of course, a year-to-date basis. So that's where we are in terms of just some of the price action that occurred this past week, where that puts us on a month-to-date basis. and where that puts us on a year-to-date basis. I want to click over now and just show you where my position ended for the month of July. So I've got a snip here of where we closed this past month. Okay, so what I have pulled up on my screen here is just a snip here of what my position looks like and where we closed this past month. So all in all, what you have here, what I just want to highlight is you have the adjustments that I made over the course of this past month. Now you'll notice that what I ended up doing was I ended up making a couple of adjustments and took profits on all of the adjustments that I've made over the course of July. And so those profits that I made on those trades are indicated here over in these 4 columns to the right of my screen here. So those were, again, profits that I made on adjustments as as the market sold off pretty heavily at times over the course of this month. I use those as opportunities to come in here and make adjustments. Again, managing my risk and making adjustments around price extremes. Okay, so I used what I determined as a price extreme to come in here and make an adjustment, and then responded or reacted to what the price action did from that point forward to take some profits on these trades and overall it improves my entire position. But the main part, as I've pointed out time and time again with these updates, is that what I've been targeting is this range right in here, which highlights whether I'm outperforming or underperforming the S&P 500 in this case. Okay, so if you go back to the position that I first placed at the end of June for the month of July, what you'll see is that this was actually about double what's indicated here. So I was showing to be trailing the S&P 500 if we closed anywhere in this range by about 0.21%. There again, trailing the S&P 500. So over the course of this month, I was able to use what volatility gave me basically to make some adjustments here and improve this to, about half of what it was when it originally started. So all in all, I'm pleased with that. I go into each month anticipating that even if we don't get a substantial down move, that we will get some moves in here that will allow me to make some adjustments and improve the overall distribution of risk and reward that I have to my position. So that's something that I somewhat account for and plan on a week-to-week basis and a monthly basis. So again, I'm pleased with that. Overall, the goal of this position, as you'll see here, the overall distribution of risk and reward here has not changed. So, again, the position here that I wanted to carry for the month of July was one that I've carried it this entire year. But all in all, I want a position that's going to capture most of a market return to the upside in here, but that also gives me a position where if the market moves substantially lower, that I have a hedge that kicks into my position, right? And so I'm basically aiming for what, very similar to like an index return, but by just passively investing in an index fund, you don't get a hedge built into that position. So I'm effectively replicating an index type of market return, but I'm also carrying a position here that's hedged. And that's the goal here. That's my aim for the month of July in this case. Okay, and if I just zoom out here, you'll see that if we had moved anywhere below, say, 4% in this case, I had a pretty substantial hedge that would kick into this position, and it would help me lose less if the market did sell off in a big way over the course of this past month. Okay, and so where we closed for this month, if I zoom in here for you. So we closed right in here at about 75.0350 on the S&P 500 futures. So I should have ended up right at about, trailing the S&P 500 here to the tune of about 0.11%. So what I'm going to do now is just click over to my time weighted return tracker, which again, what this tool does is it tracks my position and my overall portfolio return versus a passive return in an index fund. And so what I've pulled up for you here is just the Excel spreadsheet here that I use to track my time weighted return of my position and portfolio versus the S&P 500, and I compare my position and portfolio here to SPY, which, as many of you know, is one of, if not the most popular index ETF, exchange traded fund, that tracks the S&P 500. So if I scroll down here, what you'll see is I've just gone in here and noted where my position closed for the month of July and where the S&P SPY closed for the month of July. Now, if you're to go in and look, you're going to see that the close price here and my ending price here are slightly different, and that's because what I do is I take a snapshot of where my account of what my account looks like and where the market is whenever I place my trade. And I have to do that right before the market closes. So, you know, so the market will continue to move around a little bit before it actually closes. But I try to mark here just to try to be as accurate as I can be where my position was and where the SPY was whenever I initiated or placed my position for the month of August in this case. And so if I highlight both of those things for you here, what you'll see is that SPY was approximately right here at 746.65 when it closed, and my position here was actually slightly lower than this. I need to back out the dividend that I received here, and so I was sitting right at about $201,203 in my account, with SPY closing where it closed, which you'll see here puts me right at, trailing the SPY here by about 0.11%. Okay, so that coincides with what I just showed you for the position that I had on for the month of July and where we closed out that position. So there again, just to show you that all of this played out according to plan, and so I'm sitting here now, with about a 9.78% return on my portfolio. There again, if I factor in the total return to that's going to include the dividend that I received for the month of July. So you'll see I'm at about a little over a 10% return here on a year-to-date basis. So I'm pleased with that. Now, the overall annual return here, this is going to be understated by the dividends paid. So all in all, I'm actually probably slightly trailing the S&P 500 on a year-to-date basis, just because this doesn't factor in what reinvested dividends would do to this position if you were carrying a passive position in SPY. Now, keep in mind, we haven't had just a ton of volatility over the course of this year. We've gotten on the brink of really seeing an explosion in volatility, but every time we've gotten to the brink of that, we've seen buyers step in and rally the market back into this range that we're currently sitting at this point in time. So we are still sitting at what I would consider, all-time highs here. And so there again, the position that I've wanted to carry is this same position. And there again, what I'm really aiming to do is if we continue to rally higher from here, what I want to capture is a market return to the upside. So as close as I can get to maintaining a market return if we do continue to rally higher. But I also want to carry a hedge to my position that reduces my losses if we do see a substantial sell-off over the course of this next month. So I'm going to take you now to my position and show you the position that I'm carrying for the month of August. So if I scroll to the top here, the first thing that I just want to highlight is that here at the top of the spin calculator is the information that I've entered to establish this position. So what I did before was I used our spin calculator, which again connects to your Schwab account. It feeds in the real-time data from your Schwab account and drives all the calculations. Everything in here is calculated for you so that you can focus on the position that you want to take and managing risk over the course of the month. Now, once I went in and executed the position in my Thinkorswim trading platform, then I go over here to the put position tab and I lock in that position so it doesn't continue to change as the market moves over the remainder of this month. Okay, so this is just a way of me being able to come in here and look at a static view of my position so that I can now focus more on managing risk over the course of this month without any of this changing or updating on me. Again, I'll just highlight here what you have is what I would consider a core position, and we call that a core position because that's really the main component here of what is driving the overall distribution of risk and reward that you're going to have to your position and that I have to my position, as you'll see here in just a second. But it's also the main driver of the risk that you have to this position. Okay. Over to the side here, I am carrying a hedge to this position, as indicated right here on the far right. And something that I like to point out here is that I'm actually using part of my core position here to finance this hedge. Okay. And so that's the core position that I have on. That's the primary position that I have on here for the month of August. And again, I'll just reiterate that this won't change over the course of this month. I won't look to come in here and do anything that's going to substantially change the overall distribution of risk and reward that this position establishes for me. Okay, so that's the entries to the position. Now here's the output and what all of this does for me. If I scroll down here, what you'll see, this black bar right in here indicates where the S&P 500 futures currently sit, or where they currently sat whenever I went in and established this position. And again, what you have to the upside in here is just straight percentage returns on the S&P 500 futures here. So if we rally anywhere higher from this day forward on a percentage basis, it's going to show you at every percentage move higher here where that's going to put the S&P 500 futures in this case. You're going to have the same thing to the downside, so if we get any percentage move to the downside, this tool here is going to show you where that's going to put the S&P 500 futures in here. More importantly, or as importantly, what I also want to know at all point in times is where that's going to put my position and the money that I have in my account, right? The cash that I have invested in this position, I want to know where that sits relative to that same percentage move on the S&P 500 futures at any point in time, right? So this tool allows me to come in here and see, okay, well, if we're at a 5% return higher on the S&P 500 futures, then where is that going to put my position inside of my account? My position and what our system does is it teaches you to pair your position with the S&P 500 in this case. So you can know at any point, higher or lower on a percentage basis, that wherever that puts the S&P 500 out beside that, you can see where it's going to put you relative to that same percentage move inside of the S&P 500. Okay. So what becomes a really important part of this whole tool is whether you're in a position, as indicated right here in this column, where you're underperforming the S&P 500 or outperforming the S&P 500 in this case. And you'll see what I've done here is I've put myself in a position now where if over the course of this month we do nothing but rally higher, you'll see here that I have put on a position here where I am going to be, if I did nothing else and made no adjustments over the course of this month, and all we did was rally higher to some percentage point on the S&P 500, you'll see here where that puts my position and portfolio on a percentage basis as well. Again, and it's going to indicate out beside that, you'll see that I would be trailing the S&P 500 by any degree that's indicated right here in this middle column. Okay. But again, that's by design. That's because I did want to incorporate a good hedge to the downside. Again, we're sitting at all-time highs. If we do sell off heavily from here, which I believe is a real possibility, then I do want a hedge that's going to kick into the downside that starts helping me lose less money if we do see a substantial move lower inside of the major indexes. Okay, so I'm willing to give up what's indicated right here in order to maintain and capture most of the market return higher if we do rally higher from here. But as I said, the thing that I'm more concerned about, or as concerned about, is the hedge that I have on in here. And you'll see if we do end up getting anything, substantial move lower inside of here, to say to the tune of anything greater than 4% to the downside, then I have this position here, the hedges on in this position here that do start kicking in and helping me reduce the amount of money that I can lose to this position. Again, what I'll do over the course of this month is look to make any adjustments. So if we do see, some volatility spikes in here, if those give me some opportunities to make adjustments, I'll look to do that. And a lot of that will be just to improve or enhance the overall distribution of risk and reward that you see here, but primarily targeting this area where I'm underperforming the S&P 500 to the upside. So I'll look to close this gap by making some adjustments over the course of this month, if given the opportunity to make those adjustments. Again, if I do make any adjustments, it won't be based on fundamentals or technicals or anything like that. It'll solely be relative to what I identify as a price extreme on the S&P 500. And so I'll be watching for those, looking to make any adjustments to this position, again, in order to improve the overall upside that I have with this position. Okay, so all in all, that's an update for you here. I hope it's helpful for you to look over my shoulder here just to see how I'm utilizing this system to position myself and manage risk. And it's also a good way to test drive this system so you can see if this is something that could potentially work for you before you purchase our course. And if you've already purchased the course, this is a great way for you to watch over my shoulder and see how I'm implementing it. And then you can kind of use what I'm doing to decide what you want to do and how you want to position yourself and manage risk on a week-to-week basis or, month-to-month. So hope this is helpful for you. That's an update for you. We'll be back here next week to give you another recap and an update on my position and what this looks like. So hope you have a wonderful week, and we'll look to catch you here next time at True Alpha Trading. Thanks again. See you soon. Bye-bye.